Okay, M12-2 says that the buckle operates 420 stores in 41 states, etc., etc. Indicate whether each item is disclosed in the operating activities, investing activities, financing activities, or is NA. The first item that they give us is purchase of investments. Purchase of investments would be an investing activity, obviously, like it sounds. Let's real quickly, before we go much further, talk about the format of the cash flow statement so that we kind of understand where items would go. The format's going to start off with plus or minus the operating activities, plus or minus then the investing activities, and plus or minus the financing activities. If we are looking at these sections, each of these sections, the operating section would kind of deal with, if we are looking at it from a balance sheet perspective, the current assets and the current liabilities. And that's a general rule of thumb. There are exceptions to that, but generally speaking, the operating activities would deal with current assets, current liabilities. The investing activity would deal with non-current assets, and the finance activity would deal with non-current liabilities and stockholders' equity, okay? Once we get these changes for each individual section, that would give us our total change in cash. We then add to that beginning balance of cash, and then that gives us our ending balance of cash, okay? That's the overall goal of the cash flow statement, is to explain the change in cash from the beginning balance to the ending balance. In the end, your ending balance of cash here should agree with the ending balance of your most recent balance sheet. Okay, so let's go on to number 2 then. Number 2 says proceeds from issuance of stock. This will be a financing activity. Why? Well, like we said, financing deals with our stockholders' equity and our non-current liabilities. Non-current liabilities being that we finance through debt, and stockholders' equity being that we finance through equity. Okay, so this one was an issuance of stock. We issue out stock, which is contributed capital, which is part of stockholders' equity. Therefore, it's under the financing section. Let's move on to number 3. It says purchase of property and equipment. And this would be investing. Again, looking at that non-current asset, right? Purchase of property, plant, and equipment, be fixed assets, non-current assets. This would be an investing section. And on number 4, it says depreciation. Depreciation we can put under the operating section. Why do we put it on the operating section? Well, with the operating section, we have 2 methods that we can follow, right? We have the indirect method and the direct method. I'm going to write up here the indirect method and give you a little format real quickly. For the indirect method, we start with net income. We add back depreciation expense, and then we adjust for the change in current assets. Like I said, we deal with current assets here, and the change in current liabilities. Current assets, these ones go in the opposite direction. Current liabilities, they go in the same direction in terms of how we adjust net income to get the change in cash. Remember that the overall goal of the statement of cash flows is to explain the change in cash. And if the operating section under the indirect method starts with net income, which obviously is not cash, we have to make adjustments to net income to reflect what actual cash is from operations, okay? So again, relating that back to part number 4, why did we say, why did we explain this? Because part number 4 was depreciation expense. Depreciation expense is added back as the first step after you write down that income when doing the indirect method under the operating section. All right, then moving on to 5. 5 is accounts payable. Accounts payable is an operating section. Again, looking at this adjustment for current liabilities, the change in current liabilities. And 6 is inventories. Inventories would be operating activity as well. Again, change in current assets. Okay. Understand these formats of the cash flow statements. Notice that although we talked about purchasing investments or purchasing property, plant, and equipment, those go in investing activities, but so do sales, right? So if we had sales of property, plant, and equipment, that would also go in the investing activity. If we had sales of investment, that would go in the investing activity. Same with finance. If we issue stock, that would be a financing activity. If the corporation were to buy stock back as treasury stock, that would be a financing activity. Included in financing activities is also things like payment of dividends. Under the operating section, really really that deals with the operations of the business, the main operations of the business. So like I said, as a general rule of thumb, we're looking at changes in current assets and current liabilities, as well as if you're doing the indirect method, you start with net income and adjust for things like depreciation expense, which is a non-cash expense. We'll work with the cash flow statement pretty heavily in Chapter 12. That's what it's about. If you have any other questions about M12-2, please feel free to let me know.